the strangest feeling to know what to believe in.
Are we ready to go? There you go. It's Jim Check with Kelowna Now, and we're here with another episode on the on mortgages with Rampone Marsh Mortgages, and then with me today, Lenny and Aaron. How you guys doing today?
We're good. We're back. Happy to be here. Happy to see you again.
Yeah. So what are we going to talk about today?
We're going to talk about mortgages for entrepreneurs, self-employed mortgages. Right. Not always the easiest thing nowadays.
You got to do those financial statements, right?
Yeah, financial statements. Right. Banks look, a lot of people get turned down from their bank because they don't, naturally as entrepreneurs, you want to claim as little as possible to the tax man. But when it comes to mortgage time and they look at your tax returns and then you show that you don't make as much on paper, that's when where we come in.
I joke before we went on. I used to work in a CA firm, and we would do the financial statements, and then somebody would come to us after, and they'd say, "Okay, so I got these statements for tax. Now we're trying to sell a business. I need the other statements."
Yeah,
we're just like, they're the same. No. Those are the tax statements. I need the selling business statements. I'm just like, they're the same.
Oh yeah, standard entrepreneurs trying to work the books.
That's right. So obviously they kind of. They're not congruent goals, right? Because in lots of times when you're an entrepreneur, you're trying to lower your income, so you pay less tax. But when it comes to qualifying for a mortgage, you need to show income, right? So that's where the difficulty happens.
That's exactly it. And depending on how you're reporting that income, if you're in a corporation or if you're a sole proprietor, it all encompasses on how lenders look at that income.
So you have to be kind of, I guess, more creative at that point. So how do they qualify? Like, what's the biggest challenges, I guess?
Well, you do need the company financials. They have to be strong. T1s have to show and replicate what the financials are showing for the company. Right. And
T1s being tax returns.
Yeah, that's the personal tax returns.
Personal tax returns.
T2 would be the corporate tax returns.
That's right.
Right?
Sorry.
Or if it's proprietorship, it's a little bit different. That'd be right on their T1. Right?
That's right. And so write-offs, there's add-backs that can be allowed on the T1 generals, the tax returns, and the company financials.
What's the add-backs that are allowed?
There is home office use. There is
vehicle allowances.
Vehicle allowance, and there is one more that is slipping my mind right now.
Okay, so they can add those back to increase their net income.
That's right. That's right. And every lender is different on the add-backs.
So it truly is a catch-22. Like, you want to show as an entrepreneur, you don't want to pay much tax.
Right.
But when it comes mortgage time, a lot of the mainstream lenders, mainstream banks, they're going to look at your last 2 years tax returns and see what that net income is.
Because they want, their goal is to make sure you can make those payments, right? That's
typically how main banks will verify your income is through your tax returns. So that's where we come in with alternative solutions.
Right, you can't say, "Oh, I have Uncle Louis that gives me all this."
good guy will pay. Doesn't hold much clout these days.
Yeah. So, what are some of the challenges, and how do you get through some of those challenges for these people?
Well, we're able to collect the documentation to see if it fits with mainstream lenders, and they all have a different appetite in terms of how they view the documentation. And if they don't fit, we have alternate solutions that they will view the income different and or make higher exceptions on ratios, and it's just a different category. Those categories are a little bit more expensive in rate.
So that's like B lenders.
A B lender, that's exactly it.
Yeah.
But when you actually do the math, file dependent, of course, the amount you save on tax each year versus how much more you pay on mortgage interest, you're likely still winning with the tax savings.
I think you're probably winning by a large mile. Like it really is. You have to either pay the tax man or you have to pay a higher interest rate. That's kind of how it works. So a lot of these lenders, how we get around from not looking at the tax returns, they'll take 6 to 12 months of your business bank statements, and they'll look at your cash flow.
Cash flow, yeah. I was just gonna say cash flow is probably one of the things they look
at. And they'll look at qualifying you on the mortgage based on that cash flow, which is an absolute game changer for entrepreneurs.
Cash flow. And then do they look at your asset base at all? Like if you have other assets they can tie?
That comes
an encumber kind of thing?
They don't need to tie the assets, but that comes into the overall application for sure.
Yep. Yeah. And then you get into credit, like, you can get away with, a marginal credit score, even a lower credit score, And you know, even with entrepreneurs, a key point is with these alternative mortgages, you need at least 20% down
for a purchase.
Right.
Yeah.
That's almost like any type of business loan, right? Like when you're like a business is trying to buy a
Pretty
property
much.
too, right?
Yep.
So if you're an entrepreneur, tough to get lending probably if you just go into a bank, and you probably need to get a mortgage broker or somebody that kind of works a lot of these things. Or?
If you're just walking into the bank, you need to have that person on the other end needs to have the experience to be able to understand what the T1 generals, your personal tax returns represent, how the company financials can be read. And so we're able to shop the market in terms of getting solutions for the entrepreneurs.
Right. Any other kind of like things for people to watch out for if they're an entrepreneur? I guess it helps, I guess, if your wife is or partner on either side is not the entrepreneur and they're pulling a steady income from somewhere else.
Yeah, you know, every household's different, and certainly if you have, you know, one partner that is employed, that's going to help you for sure. A lot of the time, you know, if there's one entrepreneur, there's two in the household. So, you know, like I said, everybody's different, so it all depends.
Some of the biggest reasons that entrepreneurs turn to for help is because they've already gone to their bank and their bank said, we can't pay out CRA or we can't do that because you don't make enough money.
Right.
Whereas the other solutions are able to pay out your taxes if you screwed up or a situation happened in life or your accountant made an error, or whatever situation, there are solutions for that.
So they're not like stuck in never owning a home kind of thing.
Absolutely. Or if they already own a home, they're never stuck worrying about paying a $20,000 CRA bill,
right,
or what have you.
Yeah, the biggest thing is with mortgage brokers is we just bring a ton of different options to the client. Yeah. Yes, we're going to look at the TDs, the Scotias, the credit unions, all the mainstream lenders. But if you don't fit in those particular boxes, then we have alternative solutions. So, you know, we've got dozens of lenders at our disposal. So that's
B lenders, and is there a level below B too, like a C lender?
Or is that where Uncle
Louis lives?
That's where Uncle Louis lives. No, there is, and those companies have been around forever as well. Like the B lenders and the private lenders, we call them, have been around forever. They're governed. There's rules and regulations for them. So there is no Uncle Louis. You know, you don't have to get fitted for cement shoes type of thing.
The guy's banging on your door.
Yeah.
Talk, right?
No, it's all straight up. And those companies have been around for forever and ever. And they just focus on that. So there's companies that are just B lenders. They just want to get you in to help you pay off that CRA debt or to help you get your credit back up so then you can go back into that channel. They're not forever solutions. They're short-term solutions so you can go back into the best rate channel.
Or work with your accountant to get your income up so that you qualify for that mortgage in 1 or 2 years down the road. So, you know, we're a big part of the mortgage plan. Like we want to get you into a solution now, but we want to look forward to the next solutions down the road. Like, what are you going to do in a year, 2 years, 5 years with that mortgage?
Well, Jim, as you know, as an accounting background, like we talk to the accountant, the client's accountants a fair amount to say, okay, is there a happy medium on paying X tax to get best rates? Yes, no. If it's not, then how do we minimize taxes as much as possible? And so if you as a client pay an extra $10,000 in interest over the calendar year, but you're saving $25,000 in income tax. That's an easy equation, right?
Yeah. So we're doing something different. We're going to put a form in the bottom of the YouTube video now, like from the story. And then if you guys have questions out there, and if you're an entrepreneur, or if you have you're self-employed and you have questions for Lenny and Aaron, then you can fill out that form and then they can reach out to you. Because this show is sponsored by Rampone Marsh Mortgages.
Yeah, we're here to help, and you know, we love inquiries. We love navigating solutions for people. So yes, please reach out.
Yeah. So anything else you want to cover on that? Because I've got this really great question.
Fire on. I'm ready for the question.
I think that's on everybody's mind. I think there seems to be a lot more pressure on a rate cut coming.
Yes.
It seems like that's being pushed more. I think even out of the States, we're hearing a lot more noise. Like June's decision's coming here away.
Yeah.
Do we think something's going to happen in June?
One, right?
Yeah.
I'm going to err on the side of caution. I really think the first drop is going to come in September, in the fall. I would love if they surprised me with a June rate cut. You know, the data just came out where inflation has come down.
Yeah.
Month after month. So,
okay, well, I'm excuse me. I'm going to say I think there is going to be a cut coming.
oh, let's bet lunch.
There you go.
Okay, I get June or July though. It's going to come before September. How about that?
All right. Well,
I think I'm
Might be a
I'm
Subway
gonna play
lunch.
this game with you guys, and I do think that Canada is going to go first, and Canada will do like a 0.25 in June. That's my thoughts, right? Canada's numbers are a lot weaker than the United States as far as the economy goes, which I think we're in a recession. They can deny it all they want, but and I think they need. Because all these things lag too, right? So
absolutely.
You know, like they put all this pressure on. We're not even seeing the full effects of this increase, this 19-fold increase, and it'll take a while as they start to correct their overcorrectness for that to kind of lag through to, right? So we're going to see this, like 5%. It's going to take a while for that to kind of like work through the system, and when they start cutting, it'll take a while for that to kind of thing. But I do think there's some pent up demand in home buying too, right? So as people start seeing it coming, I think the banks will drop maybe even more aggressively than like the Bank of Canada will drop.
We have a lot of clients that are just kind of waiting on the sidelines, waiting for that interest rate correction, if you will. So hopefully you're right, and that does come in June.
Well, I think Canadians need it, right?
You don't have to wait though. If you're in you can take a variable rate mortgage today and then enjoy the droppings.
That's true.
Of
Absolutely.
the rate. So you don't actually need to wait per se.
So I would say to people, like, if you're in the market, be prepared, right? Go out there and find that home you like, or find several homes you like. Get all the paperwork going, right? So when you need to pull the trigger, you can be one of the first ones to pull the trigger, because you don't want to get into that thing where a whole bunch of people rush back in and you're doing these multiple offers again, right? So
and that's what a lot of people feel like it's going to, when they do start making cuts, there's going to be a flood to the market, and then you're going to have to deal with competitive
There's
offers.
that old motto, be prepared.
Yeah.
Right?
Yeah.
And then because it takes a while to do the paperwork, right? Especially if you're self-employed. It's going to take a little longer to get that paperwork done than it does if you're just a T4 person, right?
Yeah, we're pretty efficient, but you got to have your ducks lined up. Absolutely.
Yeah. And then it's a lot easier to buy and make an offer if you're pre-approved and you have all that stuff like ready to go, and you have 3 or 4 homes that you've picked out, right?
For sure.
Of course, as you're making an offer, you need to understand what you're leveraging.
I mean, we live in a beautiful area. Prices have dropped a bit too, right? Like, I mean, in certain segments for sure, right?
Yep, there's been certain parts of town and parts of the Okanagan where values have dropped a little bit, but I think we're doing better than the major centers like Toronto or Vancouver, where they've seen pretty significant drops.
Yeah, I mean, Kelowna is a desirable area.
Yeah.
So I think we're lucky to live here, obviously, right?
Absolutely.
You got the golf, the skiing, the lake.
Yeah.
I think there's a lake out there, right?
Yeah.
I mean, we live in a beautiful area, so
we see buyers from all over the place. There's a lot of people coming from Ontario, a lot of people from Vancouver, Lower Mainland. So, Kelowna is truly on the map, and they have been since COVID, really.
Yeah, I mean, I think the Vancouver, if you sell your home in Vancouver, you can buy like 3 or 4 homes here, right?
Yeah,
totally. And some people are cashing out of Vancouver, they're cashing out of Kelowna. So if you are, for whatever reason, leaving Kelowna and moving somewhere else, we can assist with that too.
Oh, really? So you guys do mortgages all across Canada, kind of thing?
We're licensed in BC and Alberta.
Oh, there you go. Calgary's the place to be. That old Green Acres song.
Ha ha ha! This is true.
Yeah,
it's humming there.
Calgary's probably the hottest
fire
market
for sure,
right now.
Right? Yeah. Green Acres is the place to be. I think Calgary might be the place to be.
It's hot. It's very hot market right
and
now.
The Oilers are hot.
The Oilers are hot. They knocked out my Canucks. But
is that your team?
That is our team. Yeah.
There you go.
It's not my team.
The group texting thread went pretty silent the other day.
Oh, there you go. I lived in Edmonton I got to live in Edmonton during the heydays when Gretzky and the boys were there. So Oilers are my team.
That's fair.
They've had a bit of a lull since then, though.
Yeah, all Canadian teams have really. So
That's been what, since 20?
I don't know. I think the
It's
Canadians in
like 20 years or something
'92.
that's in a Canadian team
Yeah.
won a cup, right?
Yeah.
I think it was '92.
Yeah, go Oilers.
Yeah.
Hopefully.
Yes.
Anyway, anything else you guys want to say today, or?
No, just reach out if you have questions. Like we're always happy to chat, email, DM, whatever. Get in touch with us. We'll help you.
Awesome. And thank you for watching Kelowna Now. And like we said, go Oilers.
I have a strangest feeling, don't know what to believe.